I'm Alric, a product manager here at Moorr. Today I'll be taking you through some of the latest changes and additions with the depreciation update on our Moorr platform. So depreciation has now been added to the platform as a way for you to track your deductible expenses relating to depreciation. This is important because depreciation doesn't actually involve a cash outlay and is actually an ongoing deductible expense that reflects the decline in value of the depreciation asset you have. For instance, in an investment property, this could be reflected as either your capital improvements, i.e. the cost to build the property, or your plant and equipment, depending on when the property was actually built. Depreciation can actually help you get a lower taxable income, which means an increased amount of cash flow and more cash in your pocket. So this means that even if you've had an investment property that's been owned for an extended period of time without a depreciation schedule, past tax returns can also be adjusted to claim these overlooked deductions. So in essence, if you're not putting depreciation in, or if you're not claiming depreciation, you're actually leaving a little bit of money on the table. So now that we're striving for a more precise Moorr platform, this feature has now been incorporated to ensure that we can increase the accuracy for your cash flow calculations. So what exactly has been added? To do that, we'll go through a quick example over here. Here we've got a standard single person user on the Moorr platform. You can see here that currently they run a PAYG income of about $100,000. They've got income of $33,000 over there, and investment property deductions of $40,000 currently, giving them a total net income of about $111,000 per year, and total surplus of $3,500 per year, or $42,000 per year. So to go ahead and add depreciation, what we need to do is we need to go over here to our asset. So you can see here we've got the property's income, the various expenses related to the property, as well as the borrowings attached. Underneath the asset page, you'll see, underneath the card, there is a new depreciation form. Clicking on the info icon will give you a little bit more information about what this is and where the calculations will take place. And you'll have the ability to set the depreciation method as well as enter in the actual depreciation values, both in the past and into the future. So if we take an example from BMT tax depreciation of a depreciation schedule, you can see here that there are various depreciation amounts that have been calculated for this particular property. Let's take this first one, for example, in year one. It's been calculated that there's a total of $13,846 that can be claimed as depreciations for that specific year. You can see here in our historical changelog, we've got the ability to enter in the total amount, the plant and equipment amount, and the capital works amount. There is some additional information around plant and equipment depending on the time or the date that your property was purchased, as this may not be applicable to you. But it's also important to note that this particular feature is intended only to be used by users who have an investment property that does have a depreciation schedule already. So taking this example before, we've got $13,846, which I can type in as the fully deductible amount. Or on the other hand, I can actually type in the breakdown if I'd like to, which is $7,995 and $5,851, 5851, which gives you that $13,846. So adding that in will give me the depreciation value for the 2024 tax year ending, being the 30th of June, 2024. So coming back over here, we can see that that value has now been added in. And if we go straight to the home dashboard, we can actually see an immediate impact. The investment property deductions value has increased by the amount that we've just specified, which is pretty significant. You can see over here that the total surplus that we've now got has increased from about $3,500 per month, or $42,000 per year, to $3,900 per month, which represents a yearly increase of about $5,000. So you can see here in just this particular example alone, that depreciation addition has had an impact of about $5,000 a year in cash flow. So coming back over to this particular page over here, when we're adding in depreciation under an investment property, you'll actually see the ability to add in multiple year entries. So if we wanted to go ahead and add in the additional year's entries to, in anticipation of future years' deductions, we can go ahead and do that. 3725 and 5851. Now what this will do is it'll allow the system to automatically capture that depreciation value when the new year rolls around. So as an example, on the 1st of July 2024, it will now take into effect that this particular tax year ending, the depreciation value for this particular year will affect the calculations on your home dashboard based on the values that have been entered for that specific tax year ending. So what if I've changed a property from a owner-occupied property to an investment, or if I've changed it from an investment property to an owner-occupied property at some stage during the year, i.e. there's not a full period of depreciation available. So it's important to note that depreciation values in this particular field are designed to be taken exactly as entered. What that means is that there are no additional calculations performed within Moorr itself. Just this allows you to have the largest amount of freedom in terms of data entry and putting in the exact values specific to you. And that is the summary for depreciation. Thank you very much.